The Knights Templar solved the greatest risk of medieval pilgrimage, highway robbery. Founded in 1119 to protect pilgrims in the Holy Land, the order quickly evolved beyond military escort. Their core innovation was the development of a sophisticated system of letters of credit known informally as the Polizza. A pilgrim deposited funds at a Templar preceptory in London or Paris and received a coded receipt. This receipt could be redeemed for the equivalent amount at a Templar house in Acre or Jerusalem, minus a small fee. This mechanism allowed vast sums to be transferred across continents without physically moving gold, establishing the Templars as the first true international banking institution. This financial infrastructure was essential for funding the Crusades and managing the treasuries of European royalty and the Papacy itself. The Polizza system operated on a network of trust and standardized accounting. When a deposit was made, the receipt contained cryptic symbols and codes, verifiable only by high-ranking Templar officials. This security measure prevented forgery and ensured liquidity across the network of commanderies. The fee charged for this service, often around 10%, was technically classified as a donation to the order, effectively circumventing canonical prohibitions against usury. This financial model generated immense capital, which the Templars reinvested into land, fortifications, and further expansion of their logistical network. They effectively monetized security, transforming religious duty into economic dominance throughout the 12th and 13th centuries. The Templar network consisted of thousands of commanderies, or preceptories, spread across Europe and the Levant. These commanderies functioned as local banks, agricultural centers, and recruitment hubs. Each commandery managed local assets, collected rents, and maintained detailed financial records, ensuring the central treasury in Paris remained liquid. This decentralized structure allowed the order to mobilize resources rapidly, whether for military campaigns in the east or for extending loans to monarchs. The commanderies were often fortified, serving as secure storage points for both funds and military supplies, linking the financial and logistical arms of the order seamlessly.
Templar military logistics were unparalleled in the medieval world. The order maintained dedicated supply chains stretching from Western Europe to the Crusader states. They managed massive inventories of weapons, armor, horses, and provisions, ensuring that fighting forces in the Levant were consistently equipped. This required sophisticated inventory management and standardized procurement processes across multiple languages and jurisdictions. The Templars utilized their extensive land holdings in Europe to produce necessary goods, minimizing reliance on external, often unreliable suppliers. This self-sufficiency was a critical factor in their military effectiveness during the long duration of the Crusades. Control over Mediterranean shipping was vital for Templar operations. The order maintained its own fleet, primarily based in ports like Marseille and La Rochelle. These ships were used to transport troops, pilgrims, and, crucially, financial assets and supplies between Europe and the Levant. The Templars developed advanced maritime insurance practices and offered secure passage, further cementing their role in international trade. Their naval presence also provided intelligence and protection against piracy, safeguarding the flow of goods necessary to sustain the Crusader kingdoms. This maritime capability was an extension of their logistical mastery, ensuring rapid deployment and resupply. The temple in Paris served as the order's central headquarters and the largest financial repository in Europe. It functioned as a secure vault for the personal wealth of French kings, including Philip IV and the Papacy. The Templars introduced double-entry bookkeeping centuries before its widespread adoption in Europe, allowing for precise tracking of complex transactions and loans. This transparency and security made the temple the preferred depository for high-value assets. The Grand Master and the Treasurer held the keys to this immense wealth, granting the order significant political leverage over indebted European rulers.
The Templar hierarchy ensured strict financial and military accountability. The Grand Master oversaw the entire order, but the Drapier managed clothing and equipment, while the commander of the land beyond the sea handled operations in the Levant. Crucially, the Treasurer managed the vast financial network, reporting directly to the Grand Master. All transactions were recorded meticulously, adhering to the Latin rule established by Saint Bernard of Clairvaux. This rigid structure and centralized reporting system were essential for maintaining control over geographically dispersed assets and preventing corruption within the complex banking operations. The Templars transitioned from merely safeguarding funds to actively lending money to European monarchs, often financing royal wars and state expenditures. Kings like Henry III and Edward I of England relied heavily on Templar loans to fund their administrations. This financial dependence created a dangerous political dynamic.
When monarchs defaulted or faced insolvency, the Templars became powerful yet vulnerable creditors. This relationship reached a critical point with Philip IV of France, who was deeply indebted to the order following his wars against England and Flanders, setting the stage for conflict. On Friday, October 13, 1307, King Philip IV of France ordered the simultaneous arrest of all Templars within his domain. The primary motivation was Philip's desperate need to seize the order's immense wealth and cancel his substantial debts. The Templars were charged with heresy, idolatry, and sacrilege, accusations designed to justify the seizure of assets under religious pretext. Pope Clement V, under pressure from Philip, eventually dissolved the order in 1312, via the papal bull Vox in Excelso. This act effectively dismantled the most powerful financial and logistical institution of the High Middle Ages.
Following the suppression, the Templar assets were officially transferred to the rival military order, the Knights Hospitaller, by papal decree. However, Philip IV successfully appropriated a significant portion of the wealth in France before the transfer could be completed. The Templars' lasting legacy lies in their institutional innovations. They pioneered modern banking techniques, including the use of checks and fractional reserve banking, and established the first truly integrated, secure, and multinational financial network. Their logistical blueprint for managing resources across vast distances influenced subsequent military and commercial organizations for centuries.